Too early, Mr. Bear. Go back to sleep, at least for a while. This is the Viper Report Market Wrap video for the week ending October 24th. Some of you may remember this video that we released in a little over a month ago, middle of September, where I ventured the view that stocks could accelerate to the upside. Certainly no one was talking about that. It was mainly whether we're going to get a correction or a crash. And I found that was quite interesting. And then, of course, the technicals, the advanced decline lines, etc., joined in to confirm that. Last week's action, good numbers on the delayed inflation report. We had strong breadth early in the week and pushed like the S&P as AD line as we'll look to into new highs. Of course, if you go to the Viper Report YouTube page, you can see quite a few. Here's the rocket launch, and the next week I was saying the stocks have changed liftoff, and then several other documentation of what sectors, etc. So if you want to learn more about the markets or my approach to the markets, please sign up and sign up for the notification thing. So as soon as we release this, you'll know about it. Overall, it was another good week for the markets. You can see the industrials up 2.2%. They led actually. NASDAQ 100 close, and New York Composite, was right in there too. Still it's lagging. Both the S&P at up 1.9, and the NASDAQ 100. Transportations were down, as were the utilities. Of course, the utilities have had quite a run lately. And gold took a breather, and a very good day and week for the Russell. So, if you look back at the last month, nice feature of stock charts, you can see that, for the month, gold, utilities, NASDAQ 100 our favorite, and, then the Russell, Dow Industrials, S&P up a little over 2. As per several requests I've received, I normally show the positions in the Viper ETF service at the end. Here they are right now. You can see, of course, we gapped higher, on Friday. There's the SPY. You can see it was pretty, impressive action. Closed right on the monthly R1, monthly R2, just under, 689. So, that's a reasonable next type target. Some of these positions we've had for a long time. I mean, going back to April of XLV is something we just got into. It had another nice week. So if we see a setback here, it's been depressed for quite some time. Q's held up well and then gapped higher. So we discussed this trading range in the last Viper report. So XLP we just added to it. It was down on Friday, and XLU, as I said, it was down a couple percent, but look at the run from right around 84, almost up to 94. Pretty good for a utility stock. Here's the weekly chart of the SPY. You can see new closing high on a weekly basis. Shows you this 595 level up here, the yearly R2. You can see this is, those of you who are thinking about following, yearly pivot analysis, you can go way back into here. You can see that, okay, we're, dropped below the yearly pivot, back above it right in here. And essentially, it was all the way above its pivot until early this year. And, we had like 4 weeks down and we were right back up to the upside. So, from around, 560, up till 677. S&P AD line bounced off, made another new high. All AD line also did. So, showing a really pattern, going back some of these circles, were really, like the start of this move was in October of 22. And then you can, go back into Forbes, what I was saying at that point, and then we had this correction in 83 that shook most people out, and then we flipped right back to positive, and things started to really accelerate to the upside. So the AD lines have been leading prices, and they're still leading prices higher. Looking at the NYSE composite, also a new high here, and you can see the stocks only AD line still making new highs also, and of course the all AD line, that's the common stock, that's been lagging over the last 3 or 4 years at some points, and the fact that it's no longer lagging is a good sign, I think, for the overall market. Okay, yeah, so the R2 on a yearly basis is at 22,500. We closed at 21,690. So, a fair good of upside potential there. You can see the Stark bands here are even a little above that level. Looking at the daily chart of the SPY, we've been consolidating here. This price range here, we've broken out of it. Sort of a we opened up sharply higher and didn't make a lot of upward progress. I mean, it's always possible we'll partially fill that gap the start of the coming week, but then it also shows much higher targets. Volume was increasing, not too bad, not as bad as it was with the big downdraft there, but you can see the S&P AD line is very strong. It's broken out of its range. Below this, we have the total put-call ratio, which has been quite low, but as I mentioned many times before, low values do not, indicate a lot to me. Sort of complacency. A lot of people put more emphasis, on how bearish that is at a low level. I find like in this spike here, that the put-call ratios, high put-call ratios, this was about, just over 1, indicate there's a little too much pessimism. On the bottom here, we have the VIX. We've been following this, this sort of uptrend here, and then, we, commented that, all I had to do was close back below the moving average, and that rally is over, So, it still bears watching, as does the VXN, but now we have new hurdles. This high, I guess, was about 27 or so. So next time it starts in an uptrend, that will be the level we're watching. Looking at the weekly chart of the Qs, you can see sharp new closing high, and it's gained over 2%. The NASDAQ 100 AD line also is broken out of its range. Usually, that's what happened way back in May, and we got pretty good rally from that. So if we look at, going forward, we can see what the daily also gapped right up, closed it above the R1. So, it's got a little support down in there. We'll discuss the intraday charts, which are very handy, in that type of instance. But if you look at, some of the updates, some of these trend lines, clearly the, AD line has, broken out of a significant range here, and shows a new uptrend here, and that's positive. So basically, now to turn this around to negative, you would need to see a drop back, below the moving average, below this low here, and testing the bottom of the trading range. So we don't see that in the cards very likely over the near term. Not quite the end of the month here, but you can see the New York Composite monthly chart, shows we're at another new high. It's been quite a run. You remember this long, tail here that was April. Cleaned a lot of people out of the market who haven't gotten back in, and if we accelerate to the upside, that'll be part of the reason. You get into mutual fund managers, etc., or ETF managers, they're going to have to prove their results at the end of the year, and if they're not heavily long some of the growth names, they could lose their jobs. So you can see NYSE stocks broke out. It's at a new high right now. Month's not over. AD line looks even stronger. As we've noted over the past couple of months, since in early October, the NYSE All AD line on a daily basis formed a lower high. Okay, so that was a divergence. All right, so that puts us on alert. First thing I do, you look and see whether there's a weekly. Then it becomes more serious. There was no weekly, so at that point it allows for just a trading range. You can see we had that sharp pullback, down into the daily Stark bands, and now we're back on the way up. You can see that the AD line has risen above that downtrend and the prior peak. So now this key support level becomes these two lows. Current students of the AD line course will be getting charts to say, okay, what's next? What are you looking for? What do you worry about? I kind of use the what's Stan Weinstein called the weight of the evidence approach, looking at a set number of indicators to tell me whether the market's going up or down. Here you have a look at the futures on a daily basis, and then you can see that positive signal here, and then a further breakout. Upside targets from Jerry's lovely signals, are at 69.37 and 7,036. That big 7,000 number. I wonder what some of the bears are going to say if we hit above that. And if you look at the 260, wherever it is, oh yeah, here we go. You can see that they had a sell signal on Wednesday, reversed back to the upside on Thursday in the morning, and off to the races again. So what sectors look good? You can see energy jump back to 70. Not convinced based on the crude oil analysis it's formed a major bottom, but certainly the short-term trend there is positive. We have no position. XLB still weak at 25. Nice improvement in industrials. That's a good pick, we think, to add to our list. XLY, we were pretty much out of that, waiting for a turn. Took some nice profits. XLP, we just recently bought that, as I noted, and no reason to change. It dropped below 50, but not by much. Healthcare, we added to it about a month ago, and then last week we added to it to investors. Still like it. Nothing in XLF. We keep watching it. XLK, nice big jump to 91%. XLC is really, sort of lagging. The prices are holding up pretty well, but we have moved those up. And XLU, 100% the last 2 weeks. Now XLRE is also poking its head up. Of course, it's a more conservative, i.e. defensive name like XLP is. So, for the week, XLK was up 3% after 2.4% the prior week. XLE is up 2.4, XLI up 2.1. All those beat the S&P, and pretty much everything was up across the board. On a 3-month basis, which we track, XLK 12.5, XLU and XLV all lead the S&P's gain of 7%. On a year-to-date basis, the top ones are XLK, XLU, and XLC. They're all up over 20%. XLK is about 26%. 10% more than the SPY's gain. So that's a real a valid reason why being in some of the sectors instead of the general market can be advantageous. Interesting RS analysis here we'll get into briefly. If I can get healthcare, we were looking for a bottom. We got a nice move up. We moved sideways. Now we've broken out of that range, so that's a good sign for healthcare. Technology, it was down a little bit last week, but still in a positive trend. Typically what we look for is for that moving, the slow to start flattening out, and then the fast in green will drop below it. Consumer discretionary and staples, could be bottom. Looks more convincing in staples, but no confirmation yet. Looking more closely at the industrial sector, you can see a bunch of new green here. Boeing, a daily and a 3-day. Honeywell, a weekly, and UPS, a new weekly there, and it's positive in the other time frames. As Caterpillar, having a little pullback, but it's still positive across the board. So I'll be watching ETN and LMT, for signs. LMT is a negative 3 days, so and a daily, so that could be one that will pop, in the week ahead. We go quickly down to the technology. Most things are already NVIDIA, new daily DTS, CRM, where we recently got a nice position in that, and it's flipped into the weekly and the quarterly pivot. So yeah, that was looking much better. And utilities and not SBAC is a 4-hour. That's really not telling us a lot. So there's some opportunities in there. So hopefully you're a subscriber and you can drill down on that a little more detail. So hope you found this informative. If please send me your comments, criticisms, whatever. Tom@viperreport.com, and hope you have a good week of trading.